Brian, for coming on today to answer all the questions that I have regarding the home equity line of credit. Thank you so much. Can you give us a quick intro before we get started with the questions?
Yes, thank you for having me, Alma. I'm Brian with Simple Lending Mortgage. We are an independent brokerage that's licensed in Florida and Georgia. We love working with Alma and all of her clients to best meet their needs.
Yes. Okay, so let's get right into it. Homeowners are curious. What is an home equity line of credit? Let us know.
Yes, so a HELOC or a home equity line of credit, it's a revolving line of credit secured by your house that you can use for larger purchases. You can use to consolidate high interest debt, different types of things, as long as you have the available equity in the home.
Perfect. That summarizes it. So you have to have equity in your home, and then you're sort of like lending money from your house.
Yes, exactly. So this can be used for pretty much anything that you really want it to be. A couple of really good examples on how you can use a HELOC. So you can leverage your home equity to consolidate high interest rate debt. So for example, you have credit cards at 18 to 24% interest rate. You're able to pull out a line of credit for a significantly less interest rate to consolidate those debts down to one singular payment that's going to be lower than all of them put together. You can also use it. You got a kid going to college and you need to take out some equity to pay for college, or any expense that you need to use it for. Now, a good example of how you can use this when you're when you're a seller. Let's say you want to sell your home. Maybe the home needs a new roof. Maybe it needs some other repairs. You don't necessarily have the cash on hand to do so, but you have the equity in the home. So the majority of HELOCs come with no prepayment penalty. Can't speak for everyone, but for the most part, they do. You can get a HELOC out. Let's say your roof costed $10,000. Take out that $10,000 HELOC to be able to replace your roof. Now your property value goes up. You're able to sell your home at a higher price, and then whenever you sell that property, you would then pay off that HELOC out of the outstanding balance of your lien. So another example how you could use it too. Let's say because we all refinanced last year, right, Amma? Into those low 2 and 3% interest rates, right? So
Yes.
nobody wants to refinance into a higher rate right now. So you can tap into your equity without having to refinance that entire property. So your initial mortgage will stay the same, and then you would just take out part of that equity on top of that original mortgage. That's why you're not getting hit with the entire refinance rate and just the increased rate you're paying on that HELOC. So you can do that on your primary, you can do it on your secondary, or even your investment home. So if you want to pull out HELOCs to make other investment moves, it could be a fast way to get a good amount of cash to be able to do that.
Okay. Fascinating. Okay. Intrigued. Okay, let's go. How does the process work? So I am an homeowner, I have my house, and I think I have some equity. How can I get an ELOC?
Yeah, so the process is going to vary from lender to lender in terms of how high of a loan to value they're willing to give you and how long their process takes. So with the lenders that we are partnered with, we actually have a whole array of different spectrums in terms of time frame. So we do have a lender that does it in 5 days. Whereas they'll go up to 85% loan to value, dependent on your FICO, of course. And they can fund in as little as 5 days. This one's actually very interesting. It's very similar to filling out a credit card application. Everything is done by artificial intelligence. So they do an AVM on your property, which is an automated valuation model, they do an AVM on your property. And then it's almost like a pre-approval. You can adjust based off of how long you want the HELOC, and you can adjust how long you want that draw amount. So the great part about a HELOC, different from a refinance, say you had a $50,000 line of credit, say you want to take out $30,000 initially, you pay that down. Let's say you paid it down to 20, well, you still have a $50,000 HELOC available. You can pull that money back out and put it back in for that entire time frame up until your draw is over. So we have other lenders that do them in a little bit longer term times. but they also open you up. Let's say your AVM is coming in low on your property, and you say, hey, my property's worth more. You can also order an appraisal to get that property to appraise. Now, the higher that appraised value, the more money you're going to be able to pull out, because that's going to determine your loan to value, right? So let's say your house is worth 500,000 and you owe 250,000 on that first mortgage. So if they're going to go 80 loan to value on that, you could pull out up to an additional 150,000 on that property. However, sometimes the AVMs they're a conservative way of a home valuation. So sometimes those are lower and you don't quite get the money that you need. So you purchase an appraisal, have an appraisal done, it can appraise higher, and then you're able to take out more money.
Love it. Wow. Okay. The process sounds good. Everything seems good now. If an homeowner is trying to get that ELOC out, what do they need to provide? What do they need to provide to get it out? Let's say in the 5 day period, what would they need?
So the 5 day period is gonna be significantly different than your standard normal HELOC. So
Okay.
the 5 day one is essentially almost like a credit card application. So
Mhm.
in Georgia, we can't do total household income. It does have to be individual off of that borrower. But basically, they'll need to do a credit report on you to get your credit score, and they'll have to factor in your debt to income. So with the 5 day one, there's actually several different options that you can do to show income. You can send in bank statements, you can send in tax returns. You really have the option to customize that. However, you want to submit that income in. Now, same with any other HELOC, it is going to depend on basically how you make your income based on to show what kind of documents you need. So, for example, a W-2 employee would be able to submit their last 2 year W-2s to show income, whereas a self-employed is going to have to submit their tax returns so that way that income can be calculated. Other than that, you'll need your last mortgage statement, you'll need your homeowners insurance declarations page, and a couple other identification documents and everything typical with the standard mortgage.
Okay, but it's basically everything any homeowner will have. Is that correct?
Absolutely, yeah. It should be something that they all are able to have.
Right.
And then the other thing too is this one can be somewhat customized based off of your needs. So, like for example, if you didn't qualify debt to income on say a 5 year HELOC, you could add it out to a 20 or 30 year HELOC to lower that monthly obligation and make debt to income work for you.
Okay. Now, um, can we use that ELOC to buy like another home? So let's say someone has a home and they're thinking of upgrading into their dream home. They're like, hey, I want to move into my dream home. I want to have this one sold. I'm just wondering, can the equity help me get the other process started? Do you think that's possible?
Yes, so you can definitely use your HELOC to put on a down payment of another home. So you see it a lot of times in kind of larger investors. Typically, it's a refinance, but they can also do HELOCs too. Whereas if they have multiple properties, they're constantly pulling equity out of those properties as opposed to selling them, and they can use that equity to leverage into down payments of other properties, and they're just continuously investing the home equity to expand their rental portfolio.
I see. So they could take money out, and so it doesn't even have to be an investor. Is that correct? Like
That's
I am
correct.
just a regular homeowner. I could take money out of my equity, buy another house, and use it for investment purposes or whatever.
Yeah, absolutely. So long as you qualify debt to income, which there are programs that the HELOC will have to be debt to income, but there are programs out there where you don't have to qualify debt to income. So as long as you pick the right loan options that best meet your needs and your goals, then absolutely that's a possibility.
Okay, so what I'm understanding from this is that the ELOC could work for you in different ways, and it just varies according to who you work with. So who you work with to get that ELOC makes a world of difference. Is that correct?
Yes, absolutely. It's incredibly flexible. But the most important thing is to find a way that it works for you to best meet your needs.
Okay, that actually is something that I was curious about, because a lot of times when clients go to talk to one lender and they hear no, they assume that that's it. Like, oh, they're all going to say the same thing. I might as well call it a day and go cry, crawl up in the ball and cry. But what you're saying now is that's not the case. So if someone listening has probably applied for an ELOC and wasn't qualified, they can like come to a mortgage broker like you, and you could shop for them to give them the best option. Is that correct?
Yes, absolutely. So we are partnered with 38 lenders as of right now. Now, not every one of them does HELOCs. We have 5 or 6. Each one does have a little bit different guidelines in terms of those HELOCs. Most commonly, different loan to value. So we have lenders that'll go up to 90 loan to value, and then we have lenders that won't go past 80. Again, it's all FICO dependent, but having those different lenders with different guidelines and different rates can ultimately lead to you getting the best deal when you work with a broker versus working with a direct lender.
Like, okay. So for people listening that are confused, working with a broker like Brian from Simple Lending means that he can shop all the lenders for you and give you the best deal. Whereas if you just walk to say A and A Bank or B and B Bank, they will only give you what they have available. Whereas there are other people that have other sort of packages and features and flexibilities available. So do not keep your heads stuck in one basket. Explore your options. Work with a mortgage broker. Got it. Now, I'm not trying to be tricky here, but can someone take out more than one ELOC on one house or the same property?
Yes, you absolutely can. So as long as you don't meet that cumulative loan to value, you can take out more than one HELOC. You just can't have all of the loans put together can't be over that required loan to value. So if it was 90 loan to value, 90%, you can't get over that 90% of your home's equity. But as long as you're underneath that, you can keep taking out. You can take out one big one. You can take out multiple small ones. Again, whatever works best for you. Although it may be a little bit tedious if you're having to pay 4 different mortgage payments because you have 3 HELOCs. But
Okay, got it. That makes perfect sense. So basically, if you have an ELOC, you have to pay a separate mortgage payment for that ELOC.
yes, yes. So you still have your primary unless your house is paid off. Then you would just have the one. But you would still have your primary mortgage, which more than often is one of your QM loans. And then your HELOC would be an additional payment that you would make on top of that. Now the nice part is you're obviously not paying property taxes and homeowners insurance twice. You're only going to be paying principal and interest on that one.
So yeah, the payment will typically be much lower.
Yeah.
Makes perfect sense. Wow, I feel like I've downloaded a lot of info on ELOC right now, and I hope the viewers have also done that. Well, how can anyone contact you? I'm going to definitely leave your contact info in the description of this video, but do you have a preferred, faster method of contacting you and anybody at Simple Lending?
I actually really don't have a preferred. So I take part in something I call the answer the phone campaign. So you call me, I'm going to answer. You text me, I'm going to answer. And you email me, I'm going to answer you rapidly, pretty much no matter what time it is. So I'm available to you to help you out anytime you need.
I love it. Okay, so I'm going to put everything in the description box. Email him, call him, text him. He'll answer. He is part of the Answer Your Phone campaign. I am a part of that campaign as well. I just didn't know it was an actual thing. So nice to know. Well, thank you so much, Brian, for coming on. I am sure that we'll have more interesting discussions about lending, making home ownership work for the ordinary American homeowner, and giving them enlightenment on the aspects of homeownership that is not so talked about.
Yeah, absolutely. Well, I look forward to doing some more videos with you in the future. And thanks for tuning in, everybody.
Thank you so much for having us. Bye.
Bye.